As you may know by now that we have had a pretty difficult quarter in Q4. It has been a challenging quarter for us. In Q4, we have not met the lower end of the guidance. Our guidance was 1806 to 1810. Our revenue closed at 1770, that is $1.77 billion for the quarter. Few things happened in Q4. We have seen a convergence of multiple events in Q4, especially during the end of Q4. We have seen delays in contract closures. We have seen slowness in decision making. We have seen ramp downs in various accounts, especially in financial services and in North America. We also saw uncertainty or delays in anticipated ramp-ups during the quarter. So all of these together created the situation in Q4, and as I said, it has been a pretty difficult quarter for us. Budgets are predominantly closed. Most of the budgets are flat or marginally down. While there is visibility into the budgets, we are not getting visibility into the spend. Especially in the financial services segment, we are finding out that clients are doing zero-based budgeting, month-to-month decision making, which is creating uncertainty and lack of predictability. Given all this, we have given a guidance for FY13, which, as usual, is a statement of fact, 8 to 10% for the year. For the Q1, we have given a guidance of 0 to 1%. Before I conclude, I also want to say that we have over the last 12 months launched a new strategic direction, a new structure in place, and we are focused on strengthening our strategic partnership with our clients, being more relevant to our clients, increasing client value. All of this are seeing excellent traction with our clients. We believe that this should be extremely favorable to us in the long run. Thank you.
Good morning, everyone. It has been a tough quarter, but I think under the circumstances we have done well. If you look at some of the metrics, we added 52 new clients this quarter. This is one of the highest in many quarters. We had signed 5 large deals. 3 of them are more than $100 million. We've been talking about platform solutions, product kind of business that has gone up to 6% of our revenues. We have a TCV of around $350 million on that front. For the full year, our pricing went up by around 5%. To be precise, 4.7%. I don't think many players in the industry have seen price increase during the year. Even though we have seen volume decline and price decline in the fourth quarter, for the full year, the quality of growth in terms of getting higher prices reflects the focus of the organization. The operating margin for the full year has come down by around 70 basis points. We normally say the operating margin will be within a band of 50 to 100 basis points. So it is within that band. It is also mainly due to rupee, because the rupee has appreciated in the fourth quarter, even though it has depreciated for a full year, and our utilization came down. Our utilization came down to around 69%. So our utilization came down, rupee to some extent depreciated. Net, we are able to maintain our operating margin within a band of 50 to 100 basis points. We have a hedging position of around $89 million at the end of the year. We have taken some cross-currency options also during the quarter, because we believe the currency market is going to remain volatile. Rupee will be under pressure for some time, because if you look at all the economic data, whether it's trade deficit, inflation, or the economic growth, I think most of them are unfavorable for the country, and RBI also do not have the wherewithal to intervene in the market. In fact, they intervened up to $20 billion in the market in the last few months, but the rupee is still above 50. So we believe the rupee will be under pressure in the near future. It could be within a band of 50 to 53. So we are continuing with our hedging policy of hedging for the short term. For next year, we are given a guidance of 8 to 10% in revenue growth. In fact, it will be very bold for any company to stand up in the beginning of the year and give a guidance for the full year. If you look at a report in the Financial Times, they talked about earlier 1/3 of the S&P companies, S&P 500 companies used to give guidance. Now it has come down to 1/5. That means the ability of companies to predict for next 12 months has drastically come down. In this environment, if you are able to stand up in the beginning of the year and say we are going to achieve 8 to 10%, that is a very strong statement we are making. And of course, we are talking about the EPS growth of around 4 to 6% because we believe for the full year next year, the operating margin which will be within a band of 50 to 100 basis points. We are not assuming any price increase in our guidance for next year because that is unknown. We take the pricing, what we got in the fourth quarter, and extrapolate for the full year. We are going to add 35,000 more people next year, which includes 13,000 people for the BPO operations. In the last 2 years, we hired 1,200 people each year on site in the US, local hires. So we are going to continue with that even this year. This year we are going to hire 1,200 people, local hires in the US. So we are making those investments. We are not given any wage increase this year because we believe it's going to be a very volatile year and we'll take a view on the wage increase somewhere in the middle of the year when you have much better hold on the year. So overall, we are done well under the circumstance. We are living in a new normal with too much of volatility and we are given a good guidance and we believe that the company is going in the right direction. Thank you.